So looking at gold today, gold is going bearish, and we are going to be more bearish than bullish. The only way we can buy gold, I'm going to show you. So looking at from the weekly time frame, so the market is tricky sometimes. I know I have a track C direction on weekly. So the candle, like yesterday, I think I made mention of, if the market wants to sell this weekly candle that was going up, it will turn back and become bearish, and is what is happening. So on weekly, we have track C direction. So means that I'm going to be, in a long time perspective, I'm going to be looking for selling opportunity on gold. And when we come back to the daily time frame, the only guy that was preventing gold from dropping is this one here, right? So, and now gold has given us, this is impulse, this is correction, this is impulse, right? And now it shows that we are going down bearish. So there's what we call the track and trace concepts. So if you understand the trend of the market and you want to counter trend, this is how market moves. We all know that this is how market moves. Impulse, correction, impulse, correction, impulse, right? Correction. But when the market is making this correctional move, sometimes this correctional move is because of market is coming in contact with the past demand, right? The past supply in the market, the past supply or the past selling pressure in the market is the one that is causing this retracement, this retracement, this retracement. So is what we call the track and trace. So if you want to counter trend, for instance, the reason why we were successful trading this retracement is because of what? This retracement, the reason why we were successful, we trade this retracement which day? We trade this retracement on, was it on Tuesday? We traded retracement yesterday, right? The reason why the retracement was, the two trade we took on this retracement was successful. This is impulse, this is correction. But if you want to trace, is what we call track and trace. If you want to trace what causes this correction, is this guy. Is this guy here from the daily. Is this daily support area here. There's a high selling demand area here. This support kind of zone of sensitivity somewhere here that pushes this market. Now, the market has finally dropped from the Quasimodo we tried selling yesterday, which is from this left shoulder, we tried sold, but the market kicked us out. So when we see, I saw this bullish engulfing that closed here. I know that the market is going to go up. Then we found a Quasimodo continuation. Then that is why we buy the market. Like if I do analysis on weekly, I say, oh, we are going to be going down bearish or going down bullish. It doesn't mean I will not buy or I will not sell. I'm a price action trader, so is sometimes I say, okay, we are going to be going bearish, and then market give you reasons to go bullish, but you need to understand, you need to know why you are going bullish or why you are going bearish. Of course, you're also not going to be 100% correct all the time, right? So this is the reason why. Now, if this market, somebody is trying to buy here, if you buy here, they will take your money. If you buy here, they will take your money. Why? Because there is no track and trace that is enough to push this retracement. And if this retracement is going to happen, it may happen on its own. I'm not going to do anything. The only way I can buy the retracement is when the market comes into this zone here. So right now, I'm waiting for the retracement. Retracement can occur here. But this retracement is not good enough for you to buy, because I'm not seeing anything that can prevent me if I buy this retracement from here. But if the market continue to drop and get to this point, this is the only way you can buy the retracement. Why? Because of the track and trace concept. Why? At this point, I put the line also fall under this resistance area. So there will be enough. Either as if the market comes here going to go up, it cannot go up. This market is going down. But because the market moves in wave, impulse correction, the only time that the wave is going to be happening is when market come in contact with a strong zone of sensitivity from the past. We call it the frequent zone of sensitivity. So this line here, from this zone here, this zone of sensitivity here, is the only time that when market comes from the H4, market touch here, we can have that mind to counter trend for the buy, because the retracement can be deep. So you don't buy retracement or you don't counter trend in isolation. You counter trend when you know that that retracement is coming from the past frequent zone of sensitivity, or the past supply area, or the past demand area, right? But now, if you say you want to just buy retracement in the middle of an unknown, you are just doing your own thing. You may be lucky, but you can't be lucky twice. So if we say we are going to be buying gold, continue to buy gold, it means in a long time perspective, if we buy, we are going to continue selling gold. It means that it doesn't mean we'll not buy. If we have 5 trade, 4 will be selling, 1 will be buying. So you have to know when to buy when you are in a downtrend, knowing fully well that your overall direction is to sell, but you can also buy if you understand the concept of track and trace, right? So I don't want this guy to reach here before retracing. I want a quick retracement from this point here before we can sell. If that quick retracement can happen, I'm not buying here. If it can happen, we'll buy. But if the market drop here and give us reasons to buy, we can buy back and then sell back down bearish. If the market finally break this guy, the next zone that we can counter trend is this one. If not, if the market break from here to here, we'll be looking for selling opportunity. If the market gets here, this is the point. This zone is coming from the weekly. If the market comes here and we see a retracement on the H1, we are buying. We don't buy because we see this guy retracing. We buy because we know the zone where this retracement is happening. This is the secret on gold, right? So now if we go to the H1 time frame, on H1, I have this line here, and also this line is a blind spot, significant break. So I was baking them because yesterday, a very beautiful opportunity yesterday, but I could not give order for people to sell because we're thinking that this guy is going to retrace. In fact, the market tried to retrace a little bit here. So I was waiting for them to come here before we start shooting the sell, before I can say sell. But then when I see that this guy is not ready, I have to, like, if I'm going aggressively, I don't have to tell anybody to follow me. So that is why I enter this trade aggressively and it pays, right? But then the market failed to come. So I was like, okay, the market has dropped. Maybe it's going to come here before selling. You see, the market continued to drop back down bearish. So now our agenda is if they can retrace back, they are dropping. They are dropping. If they drop here as well, like I said, if they get to this zone and they give us reasons to buy, we can counter trend. But the market is overall bearish. We can counter trend from here because where we are having this place is a past zone, is a past frequent zone of sensitivity from the past, and there's a lot of strength, a lot of buyers from that frequent zone that can help us if we counter trend to put us in profit. So you don't counter trend, you don't do counter trading in the middle of an unknown, knowing where you want to counter trend. Of course, this is my agenda this morning. If they comes here, we are selling. If they fail to come to this point, they come here, they give us reasons to buy, we buy, because this is a strong zone that we may have, and this zone is coming from, it's a frequent zone from the daily. It's strong enough. So if it's coming from the daily and H1 comes, this is H1, and H1 just market comes here, reject, come, close above here. What does that tell you? It tells you that this strong zone is good enough to push the market. Then we go on a buy back to this point here. This is how we're going to counter trend, right? The truth is that we have hacked this pair. Whether you believe it or not, we have hacked this pair, and we'll continue to make and mine gold every week. It's not joke. We know the track and trace. If I go back to the past time, I'm trading a retracement. It's coming from a past frequent zone. Those give me strong belief that because of the past supply at that point, or because of the past demand at that point, it will be enough for a good retracement. So market tends to retrace most of the time from the past frequent zone of sensitivity. So that is why if we go to the H4 time frame, we see, like I explained before, you see impulse, correction, impulse. The correctional move always come from the past supply or the past demand. And therefore, if you want to counter trend, let the price come from the past demand or the past supply. That is when you are going to be counter trend. For those who feel like gold want to start retracing, want to buy, they will definitely take you out, because where you are buying, there is no backup. Those past supply, how do we call it? Zone of sensitivity are where some orders of the big players are. So they will help you to push, not your $100, not even your $10,000 can move 1 pips. So it is better you buy from where you know that there could be a little pressure to help you push the market. So this is my analysis on this guy. If they comes here, then definitely we will have a deep retracement. When they comes here, you should know that you are counter trading, right? And then we have to wait for confirmation before we can counter trade. If not, this market can break. It is a selling market. So if you're in a selling market, you need to be strategic if you want to go against the trend. This guy can drop here, break this zone here. There is no guarantee that he must retrace here. He can break because what sellers are in control for now. So they can break. So it doesn't mean once the market comes here, you just want to start buying, putting buy order. No, if they come, they are coming now. Like they are coming. If they want to, yeah, look at this one. When the H1 experience a past zone of sensitivity on daily, H1 got to the zone, H1 retrace, come back, could not drop, and then break. This is the point where we buy, was on Tuesday. The reason why we were successful with all this activity here is because the track and trace concept is that this market is rejecting from a past zone of sensitivity. I will call it the frequent zone of sensitivity. And then if that kind of retracement is going to happen again, it means that we want price to come to another past frequent zone of sensitivity to give us something like a W pattern, the neckline break, then we look for buy. Or it can come here like this, give us, throw one leg, reject to give us a Quasimodo. If you are seeing something like this, you can buy because you are in a strong past frequent zone of sensitivity. This is the track. So when you see market go impulse correction, impulse correction, impulse correction, check where there is always past supply or past demand making this correctional move to happen most of the time, if not 80% of the time, at least 70% of the time. The track and trace concept is what is helping this guy to retrace. So if you're a counter trader, if you understand this, only then you can counter trend. So, but if this, I wanted them, I've been begging them to come here so that my team can trade today as well. So, but then let's see. Now, my submission is if they retrace, we buy, we sell. If they fail to retrace to this point, if they get here, they give us a neckline break or any pattern, we can counter trend. Not that I'm not saying the trend is about to change. No, we can counter trend back and then we sell back down. We have today, we have tomorrow. We're still going to make one trade this week. For today, tomorrow, we are still going to make one trade, whether go like it or not. It's being hacked already. Nothing can help. Nothing can help gold. So this is my analysis, guys. And you see, sometimes when we do free zoom analysis, and then you see something else has happened because price. Look at this guy here. You see this current price. Something can come here. You see how this market is moving now. It can come and then finally is giving us a neckline break for here. But this neckline break, PureHEART will not buy. Why? Because this market is not coming from the past frequency zone. So I will not be able to trust that retracement. But of course, it's not all the time, like I said, it's not 100% all the time that price retraces from a past supply, a past demand. But most of the time, it do happen. And if you want to counter trend, your retracement should be backed up by frequency zone of sensitivity. In that knowledge, you can become successful while counter trading. So they can come here like this push. But if they do like that, we look for our entry confirmation here. Then we sell back down. If they break, our take profit is going to be here. Why? Because this is a past frequency zone that if we didn't take our profit here, we can see market retrace back again. So if we take our profit and market breaks, we will show that now the market is free from this frequency zone. It will be free to start selling again. Where? To the next frequency zone, to this point here. And this frequency zone is coming from the bigger time frame. This is where I'll be experiencing total retracement back down bullish. Of course, if this market fail to retrace and break, meaning that from the higher time frame, let me show you. That zone is coming from, you see, that zone is coming from the weekly. So the direction we are seeing here is this track C, right? So now, if this market comes, the last one we're viewing on H4 is this one. If the market comes and break it, we are heading down to this point here. That is it, if they come. But now we are going to be looking, in a long time perspective, we are looking for selling all the way to this point. Why we buy when market is rejecting from the past frequency zone. So you need to understand gold. If you understand gold, you won't bother to trade any pair. I repeat them. Yes, gold is crazy. Gold is crazy. Gold is crazy. It's not crazy. Every pair need knowledge to trade, right? So I can't be killing myself to look at GU and others when these guys pay me more than combine those pairs together. So, okay, guys, let me plug my system. So this is my analysis on gold, guys. So if you have any queries, opinion, suggestion, how you think the market will go, you can also contribute. But this is my direction for gold. And we are going to be looking for selling, even next week. But we'll also be having a buying opportunity. So if you want to be updated all the time, you need to be in the sharpshooters group. So yesterday was crazy. The last trade yesterday in the evening was crazy. So any Mr. Kingsley, are you still here? So
yeah,
okay.
I'm here.
Yeah, this is my submission on gold. So I know you are connecting your trend line. I'm not a trend line trader anyway, but trend line works. It doesn't mean it does not work. So what is going to happen with your trend line is this. If you connect your trend line like as you do, what is going to be happening in your trend line is this. Your trend line is falling at this past frequency zone. You're only going to receive a retracement and they will break it back down. So that is the best your trend line can do. But this your trend line cannot change the direction of this market, in my opinion. Market is going down, is going down.
Okay.
That is my own opinion. That is my own, my own looking at the market. Like I said, everybody is looking at the market in respect to their strategies. There's somebody who is seeing this place as a supply area. So to him, it's a supply, it's a demand area that can push the market up, to some people. So some even said market is going back up bullish. So everybody is looking at different points. I was doubting, but then I can't be, sometimes I'll also be confused, not being 100% sure. But then what is growing my confidence on daily basis is that my error is becoming minimal compared to me being correct all the time. Most of the time, I'm always correct with my bias. So this is giving me confidence to, when I'm doing analysis, I feel confidence in that analysis. Yeah. So guys, let's wait for them.
You know, another reason why I was thinking gold is going to be bullish from that trend line because of the daily break structure.
Yeah.
Daily break high. So that was the reason why